All right, everyone. Thank you for joining us. For those of you that don't know who we are Schaefer's Investment Research. My name is Matthew Timpane. I am a CMT, so a chartered market technician. I have been so since 2018. Former portfolio manager, and partner at an RIA before I sold it. Then I joined Schaefer's, which it's just a wonderful organization. I was able to deep dive into options now the past 7 years with them. And we're actually celebrating, I believe it was our 44th anniversary. So we've been around in the business for a very long time. So please enter any symbols that you want to see, and we will go over them. I have all kinds of data that I can pull, everything from some of the unique data that we have, and then open interest levels, whatever you're thinking about. We primarily focus on options, so but throw anything in there. All right. All right. So just a quick thing. As you can see today, we've been in this kind of choppy range here on the Qs. I'll just kind of quickly go over this. And we had the major call wall level was actually 565. Now I don't have this marked up on this chart because I try to keep it clean for AYT because I want to go through everything. But it was 565, so we kind of got to push through there, and they pulled it back into that range. And then the early morning bounce was right at that 562 level, which was the put wall for 0 DTE. All right, I do see that we do have a question in here. So we will pull this out and start going back to the dailies. And as you can see, still with the Qs, we are coming down to this 50-day moving average. This pullback's not fully unexpected either, right? Like we needed to kind of get a breather here, to see some rotation, especially out of some of the hot names that are going on right now. So ISRG. It's been a little bit since I've traded that one, but it was a fave for a long time. All right, so let's pull this out. All right, so obviously it's not in its trend anymore. That's probably one reason why it was been off my radar. Once it falls off kind of the screens there, but it is a solid company. I mean, it's the robotics and surgery. I don't think that's going anywhere. I think that's only going to further advance, especially with AI technology coming in. It's really, honestly, it's not a bad spot here. All right, so I know, a lot of people are like, well, buy the trend. One of my things that I love to do is oddly enough buy the dip at like major points. So we can kind of look at it from kind of like two perspectives here. You have this level, and then you have this level right here as well. You are kind of back above that level. So as you can see here, this was prior a breakout, became support, and you kind of got this dip down. It, shook everyone out on this big move lower. So you got the shakeout for really kind of the breakout of this range up here prior. So right now, how I would look at this is, and this level is really built off of these lows and this high. So I mean, very technical based right here. So an easy way to kind of play this, if you are wanting to be long on ISRG, is use this 468, a close below that as kind of your stop, right? Now, if you do get in like a waterfall moment, so maybe I would set like, hey, you want to give it some room, maybe make it like 461, so you have room below that prior wick, right? Because sometimes you'll get those like liquidity moves that will flush out and then they'll buy it right back up, only to close back above that 469 level there. So no, not too bad. It is kind of a bearish kind of look to it, but it is at prior low. So if you want to try long, that's fine. If you want to get short, I would look for a break though of this level first. So right here, you look at this, you try the break below that. If you close back above, you kind of want to get out of it. So depending on what you're looking at there, if you're looking at to go long or short, that's how I would look at this trade. Really, you need this to pop over this 20-day moving average to get going. But again, not a bad spot. You got about, 8 points here to enter into ISRG. Where would I be selling calls if I was a long-term holder? All right. So if you're a long-term holder, you're still holding this right now. Let's see. Let's take a look here. You really have depends on what your time frame is. If you're looking at going out like 30 days, a good spot if I'm not really sure what the deltas are. I can pull this up quick. Uh, Let me just see here. ISRG. Sorry, just a second, gotta get my montage up. So if you're looking at like selling like September's or something like that, not really enough on not enough juice on the 5. 30s. So you'd want to go out maybe more in time. If you could go out more in time and maybe go up to, see the deltas. You get like the 10 delta, anywhere between the 10 and the 20 delta. So the 20 delta is 525 and the 10 delta is the 550s. 550s I'd be more comfortable with just because you got a lot more room. But the 520 is a little bit juicier there. So that's kind of how you would have to do it. I don't know if I would sell necessarily here because your IV rank is only 13 and a half. So maybe if you get a kind of a pop and then you can sell a little bit higher, that would be kind of the goal. Really, you want to see if you can sell around this 560 level or at least 550, right? So that 10 delta would work out if you go to October. 30 days, yeah, but the vol is lower now. Exactly. Yes, here's the thing. It is advantages. So if you do break down this kind of this 470 to 68 level here, probably a much better option to hedge buying puts here just because vol is so low on this and it hasn't really seen any pickup in the last few days of the sell-off. So that's how I would look at that. Also, is the screen possible to make the screen numbers larger? Let's see here. That's one thing don't know if I can do quickly. Let's see here. Auto. Yeah, I don't think I can make him larger here. Maybe stop. Okay. Maybe if I,
It's
does that help at all?
oh yeah, that looks better.
Okay, yeah, because I have a big
That's
43-inch screen, so I'm gonna guess that's part of the problem, right? So sometimes I have to make a window. All right, perfect. So I'll be done adjusting and we'll work from here. All right, perfect. All right, Control Shift T. Okay, thank you. Yes. As long as this shows up a lot better, good for us. With the bigger screen, it's really tough sometimes. All right, so Tigo was another one. I don't even know the name, but oh, hold on. Let's finish ISRG quick. All right, ISRG. What do you look at call walls and put walls on a stock like ours? It's really tough because it's not that liquid, right? Like ISRG isn't going to be one that I'm going to be really, unless I see like a big redwood. And let's just kind of pull this up here. And by redwood, I mean a big open interest level, right? So when I'm looking at ISRG right now, I'm seeing majority of the concentration is at the 505 for the front month to September, and then for the call, and then the 455, right? For the really the put wall. You do have a pretty large stack at the 480 strike as well. So you are kind of sitting right here in this pocket, right? So if you got this flush out to 455, that would kind of align to this flush out down here. And then the 480 level is the second largest open interest level heading into September expiration, with about a little over 1,400 contracts there between any weeklies and standard expiration. Uh, and then the call is 505. So they're really not going to want to see this get really over this 505. You can see it aligns with the 50-day. Again, like I said, if you want, you can be kind of aggressive, try to sell this 520 call. I would feel a little bit more comfortable if I can get up to about 550 here, just because I think like if you get up here above that 50-day, you're going to have some momentum, and then that 200-day moving average might be able to kind of hold off any kind of move if you are in ISRG and have sold calls on and don't want to get rid of it. All right, Tigo was another one, and again, I have no clue what Tigo is. Uh, and actually it looks really good from a trend perspective. Probably could see a pullback here at some point. It's relative strength right now. So I mean, definitely not something you're going to necessarily want to fade, but it would be something like, you'd look at like, hey, maybe I can get a dip back to that 10-day or that 20-day moving average and take a shot at it there. Let's just kind of look at it from a 1 week perspective so I can kind of get an idea of what this has looked like. All right, yeah. So um, you got this 2021 high here. So I would be cautious, like just entering in now. I'd want to see either a push through that or a pullback to be able to try to buy that then on Tigo. So that's kind of exactly how I look at it. I do like that it has taken out the 42 level though. You had three spots here back in one in 15, one in 16, one in 19. I am going to also guess, since I'm not very familiar with Tigo, that it doesn't really have a ton of option volume on it. But it was also a nice little pivot spot here at that 41, 42 level as well. As you can see here on this weekly chart, it's kind of a perfect little area. So if you got in around there, you're good to go. I would probably hold on to it. I'd just be a little cautious of this 2021 high. You get through that though, your next level is going to be 50, and after 50, you really don't have much to worry about until you get up to about 59, 60 level there. So Tigo doesn't look too bad. For example, finally, do you look at okay? For example, if you spot high open interest in stock, could or short squeeze. Yeah, so above that 505 is where you would have like so for September options right now, looking at for a month, if ISRG moves above that 505 strike, you are going to have a little bit of a chance for a short squeeze here. And that's my concern with selling the calls. Um, so you get above 505 and above that 50-day, you're going to see people that look at technicals, that look at option levels. They're going to get more involved in this. And I think you're going to get a pretty quick move up to at least 522. And again, maybe that 530 level where that 200-day moving average is. And that's why I was much more comfortable selling the 10 delta, which, usually I'm going to look for more of the juice in the 20 delta or somewhere in between. But my, level of comfort with it, being still, a potential move here, especially like I said, it could become a hot sector. You get any kind of robotics news or AI news into the name, or AI news into the name, especially, it could all of a sudden they, have animal spirits, right? So that's what I would look at. The top call position, or at least the final one that I would look at, because you kind of get into an air pocket on it above 510. You'd start looking at 550 and then 575. So if you were getting long calls, those would be the levels you'd look for, like squeezes to kind of go to. Hence why I said like 550 is kind of a level I think that it could peter out at. That's why I would sell it there, or I would, cover my calls because I don't want to get rid of that stock, especially if I have it at, something, stupid for, right? Like you could have this if you're long, have it $78. You don't want to get rid of that, right? That's a big tax event for you. All right, anything else? Otherwise, I'll look at some things for us. All right, so throw anything in the tickers, everyone. Let's just pull something up here. Hood, um, oh, BMNR. All right. All right, BM&R, it's kind of been a nice little trading place recently. If any of you have been able to get in on it, whether trading stock or options, options obviously it's tough. It's the implied volatility is extremely high on a name like BM&R, but for good reason, right? So for BM&R, you can see here, and this is kind of a combo indicator that has my candles. You'll notice they're a little bit different. And I don't really look at MACD solely, RSI solely. This is kind of a combination of that, CCI, and it's like just tells me, hey, all right, where's the trend? What are people looking at it on indicators? You can kind of see the last kind of like buy signal from it then was when things started turning green down here around that 50-day moving average, and then you kind of got this rally. So now we're in a little bit of a downtrend from those lagging indicators. Not necessarily it doesn't you know, determine my idea of whether to buy or sell. It just tells me what other people are kind of seeing here. You are pulling in this 20-day moving average. You do have this VWAP right here too, and that's a year-to-date VWAP. You are slightly under it. So I would kind of hold off on that. And you do have a curling 10-day moving average. Um, I do like BMNR, and if you do get down into like this area here around 41, 40, I think it's a great buying opportunity. Otherwise, you're going to want to wait for an upturn, get back above that year-to-date anchored VWAP level, and then, maybe hopefully you can take out this 10-day and hopefully that doesn't become really a problem as resistance. So that's kind of how I would look at it is, give it a shot here above 5150, above that VWAP. And then, like I said, just be ready. Like, hey, 56 could be it, right? That might be all you get. 5, 6, 7%. Move on the stock here, just because we are in a more seasonal, volatile period between August and September. We have a tendency to either chop pretty violently or get pullbacks in the market. And that's just been historical norm. So I would say that, are seeing like the 3 month put skew right now is, at a pretty high, or 3 year put skew is at like a high for the 3 year mark. So, I mean, the chances are a lot of people are seeing this potential pullback. I think it's more of like a stair step down if we do get a pullback versus a big crash. That can change. You start taking out certain levels, it will definitely change because market makers will be forced to sell and be in a delta hedge. But for BMNR, that's how I look at it. Come down here. Maybe you can get an opportunity around 41 into that 50-day. Otherwise, take it above that VWAP and go up to about the 10-day as your first level of risk. You get through that 10-day, prior high here at 67 on that closing level, easily should be attainable then if you get through the 10-day. All right, PLMR. All right. Palomir Holdings. I did see this recently somewhere. The one thing I would do is you are sitting at year-to-date VPOC, which is the volume point of control. You just pop back above that. So not a bad spot really to take a shot on it. You do have that rising 200-day moving average still. So, yes, the 200-day at 130 definitely could be resistance if you're taking a shot on it on the break above the 20-day moving average here and that volume point of control. But so just be aware that, hey, yeah, you could get rejected at 130. Set your stops appropriate, right? Like if you got in on the break, set your stop below, maybe this 10 unit in the VPAC or VPOC right there. So volume point of control. So around 122 and a half. It is rising. So you get above that 200-day moving average, you got a solid upside move. Right now, I would say that move would be to about yeah, 135, 136 level. You do have the year-to-date anchored VWAP right there, and then you have a falling 50 days. So if you're in it, good job. Like I said, a couple levels of watch, 130, and then that 137 area, 135 level, kind of in between that VWAP and that support prior resistance right here. So here I'll even just draw it for you. There you go. So 137, even be a little bit cautious on it. Go down to about like 135, 137. You can start taking some shares off if you have shares. All right, Meta. All right, Meta. Nice little pullback last few days. Yes, correct. Right into that 50-day moving average and prior highs, right? So how I would look at this is, and just because these wicks do kind of seem, this wick kind of seemed important because you have this closing high, you're right into the move right here, right? So maybe if you take out, you'd have that 20-day moving average. Honestly, for me, I would take a shot on it. You can take a shot on it here. If you're willing to give it some room, use that 50-day as your trailing stop, right? There is potential to see some wicking action down here if we are going to curl at this level. So that's how I would play this right now. You got to give things a little bit of room at times. That's the biggest thing is like people will be like, well, I'm up now. Let's set it right at break even right away. Really tough to do that because you're going to kind of get stopped out a lot. So for me, that's how I would kind of play this is, really you're sitting here in this little band of prior high support now could be, right? Prior resistance now is support, general rule of thumb, right? So it's an SR flip zone, but understand you will probably get wicked out if you don't use like the 50-day. So right now that's about 728. So I would use that as like, hey, we're closed below 728, say it's at 726, just get out. Yes, it can still rally back in your face, but it also prevents, you opening on a gap down lower, say, down to 698, 700, that round level. Does it need to fill that, which would take you to the 50-day? You know, that's kind of what I'm saying is like, hey, a close below that 50-day. Yes, gaps are important. Not all gaps are filled, though. I know the saying is all gaps get filled eventually, but the truth is they don't. So if this is a kind of a breakaway gap, right? Like it doesn't necessarily need to be filled today. It doesn't necessarily need to be filled in a week. That eventually could get filled through a large correction a year from now. And they don't necessarily need to, get filled. In something like Meta, you're going to see a lot more often than not they get filled than something that's like a leading AI technology that's breaking out, right? That is just never going to come back to that single digit level or something. So yes, that could be your potential. Otherwise, if you want to be more conservative, set a buy opportunity around that 50 day, right? Like just set a limit order out there around 728, 7, whatever, 27 for that gap fill, 726. See if you can get that dirty buy and then they take it back up, close it above that 50-day moving average on like maybe a one more down day, right? We do have 3 down days now, so the chances are people are going to start looking for a little bit of a curl. So the people that are coming in late to the shorts, they're going to look at start, maybe trying to rally this back up. So that's one way to kind of think about it. So you can kind of get maybe one more move down. But at some point you're going to think they're going to start trying to trap some of these late shorts to the game. All right, RYTM or E. What is E? E. A few minutes left, so E. All right, so not familiar with the name. Solid trend. You can see here this 20 days moving really nice. If you're in it, I probably wouldn't do anything about it. You are breaking out as well. Your next real kind of big level here. This is, be about 36. So you're not too far away from it, but really, I mean, come on, your next level here, $40 really, 39, $40. That would be the next big one. So if you're thinking longer term here with this name, because it is in a nice trend, using that 20-week really, when you look at the weekly chart and lately it's been using this 20 day. So pullbacks to like the 20 or the 50 are buying opportunities if you're in this. Um, right now, if you're going to get into it new here and think you're going to trade it up to 40, I would really kind of look for a pullback to about the 20-day moving average just so you don't get whipped out. And then you can use that and say, okay, well, if it's going to stop you, just stop on a close below because the chances are it's going to come back to that 50-day. That should be roughly around that 10-week moving average there. So that's kind of how I play that. RYTM. You guys like the names that aren't on the radar for options, but no worries. I've traded small caps in the past and just focus on options like the last 8 years. So it's not really, I guess, a small cap, 6.7 billion, but just the lesser known names, right? This looks good. I mean, hey, you got a big breakout. Certainly you've had this volatile move, right? So I wouldn't say that like it's not, I wouldn't say like, okay, hey, like just let's trade this for sure. This is really your first day above the 100, right? All right, what's the old thing Jesse Livermore said was, if it breaks above like that triple digit, kind of level, that round 100 level, you can maybe get 10 points out of it, but you really kind of need use that round 100 level then as your stop. A close back below really puts you at risk to coming back down, testing a moving average, whether, that's the 20-day or the 50-day. Um, you know, and if you really get moving south, there's always that chance you come back to that 70 level, right? Like in a bad market, this thing's gonna move. It's a pharma company, but it's a little bit newer issue and it's been volatile, right? Like I mean, it's looked really good since issuance. I mean, just in the last 2 years, right? Or year and a half, you're up roughly you know 50 or 100%. So great looking stock. Again, you can hold it over 100. Otherwise, I would probably see if you can get a pullback. But hey, if you want to take the risk right here, use that round 100. Like a good close below it. Use like a 99 or even use the 10-day, right? 97. It's only 3%. Um, as your tight stop on this, so you don't get caught, right? Because you're kind of a little late from the momentum move to the 100 mark. That's kind of how I'd play that. All right, let's see. Do you think Meta could get to 650 level? All right, let's go back to that. And again, this is for you guys, so anything you want. All right, 650. Yeah, you need to break that 50-day though, right? You need to break the 50-day. You need to fill the gap. So a larger correction, it depends if we're gonna get like that bigger kind of seasonal move between now and September or post September expiration. Lately, they've been coming more post September expiration. August has been a little more choppy the last few years. Now we did kind of get a big move last year right into August, but then we got a huge rally in the OPEX. Uh, but yeah, I mean, you would need to close below obviously the support level here, and that 50-day moving average. At that point, it might be worth really taking a short. I'm much more an advantages guy. Like I would look at like a real quick short here, like in these type of levels, like when they pop back up to a prior high, and I can see like a call wall there. You can capitalize on these short-term moves. But for like a trend type move, definitely look below that 50-day moving average. It gets below it. Let's see. You had a fake out here, but last kind of close below, 24th. You kind of got a quick swoosh lower there back then. Again, another break that 50-day, you kind of got faked out, so you're going to want to give it room, but then you got that, earnings gap lower. The last time we really saw a trend below the 50-day was back during the bear market. So again, you can take a shot on it below the 50-day. Uber, because I only got 3 minutes. All right. Uber's something I've been playing this year quite often. I think that was a short bag there, and then I know I played it on some credit spreads as well. I believe it was right here, January 2025, and then I think I did another credit spread around here in April. So not long call premium. That was more, it was more of a collection because I thought, hey, it might get stopped here, and I'd rather have played long call premium, obviously, but you can't always get it right, um, but a win is a win too. All right, so Uber, definitely still looks good. Again, you can see it's kind of struggling every time it gets up to that round 100 close to it. So, I think you're kind of in a choppy mess here with it. It's going to start forming into. So really, you know, if we get a bigger pullback in the market and say for some reason you get this pullback down to this 82 level, beautiful buying opportunity. The other level I'd look at is right there, 86. Those are the two spots I would probably try to take a shot on it uh, for Uber. All right. So I don't think I would get into the mess before it though. If you want to be a short-term trader, yeah, you got the 20-day and the 50-day in confluence there. You can take a shot and then PM. And will probably be done. Oh, ON, ON. All right. ON, ON. I did look at this not that long ago, but it was right around here. Didn't take a shot on it. These are old levels from an old AYT. Let's just take a look. Oh, it's actually from an old trade from a long time ago. All right. So, yeah, right now I would hold off if you're trying to get long. It's probably a better short actually at the moment. Uh, but on a break above 47 and that kind of that 20-day that's falling right there, this might be a really good opportunity. You're coming off of, well, 46, 46, 47. You kind of got a little confluence there, right? So this was kind of, you can see the range highs here on that flush. Otherwise, wait for this thing to kind of settle out. It might settle, a little bit lower, 43.5, but I mean, you do have risk all the way down to 35 right now. So I would look for kind of a break above this level at the bare minimum. And then at that point, you're really still only going to be playing up to about 40 and a half, 50. It's a tough trade right here, is what I would say. It's not that I don't like the company. It's not that I don't like the shoes. It's just a tougher trade right now to get long on. And then super fast PM. All right, PM into the gap. You're at the 50-day. There's a good chance you close this gap at 178 if you can get a close above this 50-day moving average. So if you're in it, definitely stay in it, but understand that you do have 175 resistance as well from this prior low, prior high. Through that level, I mean, hey, you're going to go back to that 185. So just be aware if you're in that. Otherwise, you could probably start looking at like, hey, say it comes up to 178, comes back down through this level here, you might get a short opportunity. So